to the Floor Show. Trader Keith Fitz-Gerald joins us live along with UBS Managing Director and Senior Portfolio Manager Jason Katz. I want to start with Keith right now. What does this price action tell you after a week that felt like it was chock full of Fed heads, yammering away, scaring the markets, encouraging the markets, and then, of course, conflicting data?
Well, it's exactly what you said. It's like watching Charlie Brown in the old days, you know. I think what we've got to do is I think they're putting stuff on sale that shouldn't be on sale. So particularly tech and energy, the laggards today, I think they're setting up for a classic run higher. This is scare all the weak money out. The week ahead of Thanksgiving, traders are walking away, starting to go on vacation, volumes thinning out, spreads are widening. This is normal. Play to win or don't play. All
right. It feels like risk off, though, for investors as they wait for some type of catalyst. All right. So, Jason, what do you expect could be the catalyst? And do you think that's the right tack to take by investors at the moment?
Well, we've gone from this obsession over inflation, and now all of a sudden, they're not as worried about that. Now it's worries about recession. And look, the Fed has said they're going to build this bridge 100 feet too long. Better that than 100 feet too short. So the Fed's going to hang around a little longer than we'd all like. And so I think that markets are going to be really on edge here. We may, because of seasonals, run up to 4,100, but I don't see a lot of catalyst for us to get much further than that, at least in the near term.
In fact, Citi last Friday, Keith, was saying there will not be more catalysts until maybe November CPI, which comes out the day before the December Fed meeting. And so, therefore, you should get rid of your shorts on the S&P 500, go long treasuries, because right now they've got terrific yields. But what else? I know you're a stock guy.
Well, I mean, I'm an opportunistic investor, so I'm going to go where I think I've got the biggest bang for the buck. Right now, you go to stores that are on sale. You don't go to 50% more sale. So I'm looking at the tech. You cannot afford not to have technology protection. CrowdStrike, for example, is one of the best players in the business. Revenue, customer count, all those numbers are going in the right direction. Price is simply divorced from value right now.
Yeah, we have seen prices, though, in many cases come way down. So, Jason, Charles Payne was just talking about Sam Bankman-Fried, of course, of FTX, saying he's a kid, wearing a T-shirt and shorts and playing video games during fundraising calls and things like that. It feels like, as you have made the point, that it's no longer cool to sit at the kids' table as an investor. What did you mean by that?
Or the cool kids' table in this case.
Yeah.
What I mean by that is what's taken us to the party over the last decade is not going to take us home. Everyone's a creature of habit as an investor, and they clamor on terms of what has worked. But what's worked lately are value, are cyclical. The best offense is sometimes a good defense. So I'm long things like consumer staples. I am getting exceedingly long healthcare, which is arguably our #1 sector choice.
Healthcare. Okay, that is very defensive. But, well, can I just say, you said the one that really kind of took you to the party is not the one to take you home. I'm hearing you say technology.
That's right. I mean, look, 60% of the earnings from technology come from overseas. The dollar's waiting on that. You have consumer spending down. You have business spending down, ad spending down. So, look, you're seeing the nightclub where the lights have come on and all of a sudden the party's over because you see what you're dealing with. You're dealing with earnings that are probably not going to justify some of those multiples.
Well,
go ahead, Keith.
If I may, I mean, and I think the world of Jason, he's absolutely on it. But I think the distinction we've got to draw is that not all tech is the same. It is a very different proposition to invest in an Apple versus a Peloton, a Carvana versus a Microsoft. So if you're making investments in tech, you've got to stick with the companies that are moving forward anyway, despite
But
it
isn't
all.
that,
The rest
see,
of
this
it's
is what makes me nuts, Keith. Chips. Everything needs a semiconductor, yet that looks like a very anemic trade, day in, day out, even when some companies are actually coming in with good numbers.
Well, I would submit you're absolutely correct, but that is political buffoonery. Those are strategically important national assets. So if you operate on the assumption that sooner or later China is going to make a move on Taiwan, Russia, North Korea, the world is filled with bad actors, we're going to have to bring those things home. So if you believe in that argument, and I do, 3 to 5 years out, U.S. chip makers are going to be going to the bank because they're going to be the only place on the planet where you can get the kind of transparency and return and supply that you need.
Jason, Warren Buffett and company over at Berkshire bought TSM, Taiwan Semi, this week, and he's a longer-term investor.
Yeah, look, chips are much more than just the PCs. It's the internet everywhere. And I would agree with Keith, it's not all tech is created equal. Look at Palo Alto today, cybersecurity, the back end of technology. That's where you really find the opportunities, not so much in the 7 names that have driven the S&P and the NASDAQ in the last decade.
Taiwan Semi is a $426 billion market cap company. That's the one we really need to show. And here it is. This is the intraday picture. It almost looks like the rest of the markets. It starts up, starts moving all over the place, and right now is pretty much where it began the session. Jason, Keith, good to see you. Thank you very much. Hope you have a wonderful holiday. In the meantime...
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.